Today, we're connecting some serious geopolitics right to your wallet. Okay, let's dive into the surprising story behind some pretty big moves in the market.
So, on January 21st, a really important economic signal started flashing red. The benchmark 10-year Treasury yield, a key rate for all sorts of loans, dropped to 4.27%.
Now, it only fell by 2 basis points, but that was enough to signal real investor concern.
Right, so a basis point is just 0.01%. So, what's spooking everyone?
Well, the answer isn't in a bank. It all started with a presidential announcement.
The whole thing kicked off over a dispute involving Greenland, of all things.
And the plan laid out a really rapid escalation, which definitely shocked international markets.
And you can bet Europe pushed back immediately, raising fears of a full-blown trade dispute.
This tension sparked a very specific fear among investors all over the globe.
It's something called the Sell America trade, and yeah, it has some serious consequences.
Case in point, a major Danish pension fund just announced they're ditching U.S. government bonds.
And we're not talking small change. They're pulling $100 million from U.S. Treasuries.
Officially, they blamed poor U.S. government finances. But there's another layer to this.
The fund's CIO admitted that all the political drama, while that made the decision a lot easier.
But the U.S. government, they're basically just shrugging it all off. So one side sees a financial risk, while the other side is calling it irrelevant.
So what's the bottom line? It's a perfect example of politics creating real economic jitters.
So now the market is watching. Is this a one-off or a sign of what's to come?